Hey traders, this is Blake Morrow with Trader Summit, and I have Mr. Bill Baruch of Blue Line Futures with us today. It's been so long. Good to see you, Bill.
Thank you for having me. It has been a while.
It has been a while, and I'm so excited to get caught up with you because, there a lot's obviously happened between the last time we spoke, but more importantly, we're seeing some good moves even in metals right now when the market's kind of steady, waiting for this the debt ceiling debate to end. So before we get into like some of the what's happening in some of the commodities, some of the markets you're looking at, I really wanted to get your opinion really quick on the debt ceiling. What do you see happening how do you see the next couple of weeks playing out, and what's going to be the big catalysts as a result, big movers as a result?
I do think it gets resolved. Of course, I mean, everybody thinks it gets resolved. I actually believe they're a bit closer than the headlines would tell you. News these days, they don't want you to think everything's okay anyways. That's how they get you to watch it. So I think things are a little closer right now, after the middle of this week, or at least the start of this week, than people think. But it's all about posturing. I think President Biden, he may, there may be a bit closer resolution, but he's got to act tough, and that's the posturing that's going to be turning around to his team and the other Democrats. And I think the GOP might be conceding on a few things, but maybe getting a little more than what people had thought initially too. And that could drag this out along to make sure all parties, are showing the toughest fight right now. But I'm confident that we get something done, and we, it's in the rearview mirror soon enough.
So are you going to be a buyer on risk if that happens? I mean, is that going to be a green light for you to be like, just long risk assets, continuing to buy some of those tech stocks? Or do you think it's going to be a sell the rumor type of event?
Well,
sell the news. I'm sorry.
It's a tough way to talk about it here. I do think the equity markets. I mean, we've been bullish equity markets. We're really fully invested with Blue Line Capital, the registered investment advisor, handle securities portfolios, do a bit of a thematic rotation there, and we've been really invested. Of the securities buckets of the equities stocks themselves, 50% of it is tech. I think tech will continue to lead higher, but you might get some cyclical push as well. So I think that it's going to be a risk on. Overall, more broadly speaking, if that risk on coming from the debt ceiling can get us above 4,300, then you might have a really, really big, cycle move that's taking place, and that could really take us a lot farther than people think. From a commodities and macro viewpoint, it's tough to say what rates are going to do. I mean, I think right now there's sort of this twofold here where if they get the debt ceiling done, they're going to print more. Where in the curve does that affect it? I mean, I think it's going to be very short term. But then as well, is there more of a risk on move, which also, weighs on prices and underpins rates up a little bit. At the same time, there's the risk of default right now, and a relief of a default, may be a little bit of a bump up in treasury prices too. So there could be, I think there's gonna be a little bit of a whipsaw there, as long as rates don't move much. In the days following, I think that kind of rolls out the carpet for a risk on move. It's tough to say though, what the metals will do, because I think you're going to see the U.S. dollar. It's going to be a tough one to say. I think the dollar right now, less about the debt ceiling and more about looking at that June Fed rate meeting, Fed policy meeting as something that's going to be more of impactful for the U.S. dollar.
All right. Well, before we got started, we were just talking about gold and how it slid past 2,000. What's your views on gold right now? Gold and silver. Let's kind of go there, because gold, like I said, broke 2,000. It's been pretty steady, pushing up against those all-time highs. Silver's had a nice push, but we're seeing a little bit of pullback right now. What are you looking at there?
Yeah. Thanks for asking. I do a lot in the metals, and I sort of flipping my sentiment a little bit. Last week we had a big fallout. It came ahead of the China new loans data that started to show some deterioration there. And you have to watch, China. If you're trading metals, you have to keep a pulse on what's going on in China. Their data has been very disappointing. Just last night on Monday evening, we saw everything across the board, and that deluge of data, except for the unemployment rate, all missed expectations. Industrial production, for instance, was expected up 10% year over year, because April of last year was a contraction, was one of the only contractions through 2021 since then. And so this base comparisons were low, very disappointing. I think it was 5.8%. So China, what that does is that increases the U.S. dollar against the Chinese yuan, which is now at the highest level since early March. And that's pressuring metals. I mean, so silver was, the second chip to fall. Copper was really the first one last week. Gold is now, breaking what was a little bit of a floor support at 2007. I'm looking at that backstop that's been 1980 to 1990, going back all the way through April, and some of the battle that it's had after settling in through that March rally on the banking fears. If that starts to surrender, then I think we'll start to see a little more washout. Silver is testing the 50-day moving average. Let's call it $24. It's a little higher than that though, but it's breaking through there today. I've said it for years that when silver is above the 50-day moving average, it stays above it for an extended period of time. When it gets below it, stays below it for an extended period of time. So these are all things that, although I'm an eternal bull on metals, these are all things that I cannot ignore, that have got me negative, at least in the near term. And then obviously the one that everybody's watching is you have this failed high in gold, 2085. Was it last week before? And then which is the triple top up against the 2089 and 2020 year 2020. And then silver, last week on that CPI number, tried getting above 2620, couldn't really get above there. So we have some failed technical levels in gold and silver, and it's started to open the door a little lower. And then again, I'm watching these the CME group puts out the Fed watch tool. It takes Fed funds futures and creates a probability of hikes. And I think that just some of the narrative that we've seen from the Fed, they're not talking about, pressing forward that they need a hike here in June, but I just think the probabilities at 20% that they hike 25 basis points is just a little underwhelming right now. I think that needs to get bumped up. That would increase the dollar as well as rates, and that would also weigh on the metals. So that's how I'm looking at it right now, and how we're actually breaking technical levels. So I think you have to be a little negative in the near term.
And you're trading it in different ways, like than maybe some of us might be out there trading, just straight up, cash market. Some of us might trade an FX derivative. How are you actually trading gold at Blue Line Capital?
Well, everybody should be trading futures, of course, through Blue Line Futures. And we make it very easy. We put a lot of research out every day for our clients. And the great thing is the CME's done micro contracts, so they're 10-ounce contracts of gold and 1,000-ounce contracts of silver. So, it really opens the door for everybody to get involved. Blue Line Capital is my registered investment advisor where we manage securities portfolios. Blue Creek Capital is a commodity trading advisor. So I run two programs there. Global Opportunities Program. We launched that last year, had a terrific year, and that 40% roughly estimate of that trading is metals, 30% is equity indices, and then 15% energies, and down the road of some commodities like agriculture. But we do a lot of metals trading there, and then we launched a metals, the Metals Alpha. It's what it's called. It launched April 1st, and that's just solely focused on metals, and it's a total return. Though we want to have, if things are trending higher like they were, up until about last week, then we want to have some core long positions that we may be hedging or not, but have some core exposure, long gold and silver and copper, so be it, if they were trending higher. Get creative with what we're doing. I mean, right now, like I said, we like to hedge, and we like to make sure that we're managing our risk properly. But there's also a lot of interesting ways to be involved. I mean, if gold was really the last chip to fall today, it was battling 2005 to 2010 through last week, and it kept responding. It actually rallied some $30 off of that to 2040s late last week. And so that, looking at that again, you have silver breaking down, copper breaking down. We know the economic data is trending poorly. I mean, retail sales. So where the trend started breaking in others, but I also want to be able to quickly flip short gold. It's something that I would do in that program, like I did here today, is have a futures position, but a 4-to-1 option position. So you're neutralizing your delta. If this thing starts breaking like today, your deltas are picking up to the downside. And now, not only am I not losing money, I can start making money if gold really starts breaking through 1985. But we've overall, like I said, the trends have been broken, silver leading and copper leading. We've at least in the very near term for a very short term trade, we have flipped short.
Let's talk a little bit about copper, because copper has been breaking down really over the last week, and it kind of accelerated earlier this morning following that Chinese data. How are you reading copper, and what is that telling you about the health? Dr. Copper, how is it telling you about the health of the global economy, or maybe more specifically China?
Yeah, copper was hanging above 380 by thread a few times and actually rallied back above $4 couple instances through that consolidation, and that 380 also aligned with January's rally, where copper really surged to start the year in the reopening hopes of China, and the reopening has just been very flat. And we've seen data over the past month or two that's actually showing very disappointing. You're seeing inflation, CPI, PPI late last week was disinflationary. New loans data was something I was holding my hat on, that thinking, okay, copper could really rally out of this a bit and surprise people. If they're making loans, then and they're beating expectations, really hefty expectations on those. They were getting a lot of loans out. If that was taking place, then there's going to be needs for construction. They're rebuilding. There's things that are taking place that will require copper. And looking back at last Thursday, new loans disappointed, really deteriorated quickly. And that echoed the slate of data that we got last night, Monday night, where everything really disappointed. So I think it's telling you that things are slowing. But at the same time, you look what's going on. I mean, I think a lot of it's becoming discounted. Now, I do think when you see commodities and prices move the way they have, like copper has, it's more of a buyer strike, just trying to find the balance here. You kind of got to get it out of the way, let things settle in a bit, and you don't necessarily want to pick a bottom. I actually am fairly bullish on copper, although I'm trading from the short end right now. I think that we'll see $4 again this year. And one of the things that we really got to remember is again, China consumes 50% of the world's copper. And The Economist put out a magazine cover last week for this week that was saying peak China. So you got getting these magazine covers. You look back in February, they had a magazine cover with Alphabet. Is AI going to eat Alphabet's lunch? Alphabet's up 24% since that magazine cover. You look back at October, they talked about the dollar strength. You had Barron's, you had George Washington popping out of a U.S. dollar and with in a tank top, flexing his muscles, and that was the top of the dollar. So start getting these magazine covers. It is. I don't blame the journalists so much. They got to cover what the trends are, and these are trends. And once they start covering it, though, the trend is really baked in a bit. So way I'm looking at China going forward is the negativity, the pessimism is just mounted so much right here that we actually need less of a good news in order to start turning things. So we may not get the growth that I was forecasting a couple months ago, but now something much less will help get us back above $4. And I think there's gonna be a great trade there.
Awesome. Okay, well that's good to know, because I know there are a lot of China bears out there, and so and copper bears too on top of it. So it's good to get your point of view. Before we wrap things up, I actually want to talk to you a little bit about crude oil, because crude obviously has had a lot of volatility as of late. Seems like the 50% retracement of this bounce right around the $74 level has really capped crude. Where do you see crude over the course of the next couple of weeks, and why?
Yeah, we've seen $73, $75 sort of building as it was 82 to 83. 82, 83 was much more pronounced, but when we fell down from 90 for really kind of crashing through that, 82 to 83, kind of look maybe what 73, 75 starts looking like right now. And that's a concern. But you hear from the IEA this morning, their monthly report, they're actually anticipating China growth. They're actually calling for 200,000 barrels per day more oil demand than they initially were. They're also calling, I think it's a 2 million barrel per day, demand outstripping supply, because when China comes back, they see that. So they're still forecasting that. That's helped underpin a bit in crude oil here today. I also think OPEC Plus, they're going to be proactive on things. And you're hearing from the U.S. that although you're seeing SPR being sold, that they're going to be trying to, replenish those reserves as well. So I'm not negative on crude. I think there's been, patience opens the door for opportunity. So, we get these massive spikes down, which kind of, got to pick a bottom like we did the other week, but you get you spike down and you kind of let it settle in. And I thought there was a great trade there against, I figured my level at this time, but it was like 63 and a half, $64. There was just if you go back at the chart, there's just this line, go back to 2018, all the volume exchanged hands between, 62 and a half, $63 going back to 2018. So that first test into there, I think was, it was a buying opportunity. And that allowed us to get some call spreads on going a little farther out and just sort of sit here and be patient if this thing takes off. But I think it's going to be, a two-sided trade for a bit.
Well, I have to say, Bill, I always love your work. We publish, a lot of your work on Trader Summit. So therefore, if you like what you're hearing here, make sure you give Bill a thumbs up. Make sure you follow his work. Comment down below if you have any views on anything that he's talked about. But Bill, I love it because you talk like a trader, you trade like a trader. And so if I'm going to trust you with my money, how in the heck do I find you and more about what you do?
Well, the easiest way to find us is bluelinefutures.com. You can sign up for our research there, free trial, 14-day trial of our research. You can everything that I write about the S&P, crude oil, gold. My partners write about agriculture products or trends within, trend following systems and stuff like that. So we have a little bit for everybody, put a lot of videos out, a lot of content out to help you, have a lot of education on that site too. If you're looking to invest with us though, just ping us on that site, put some information through. There's a contact page. You can put something in as well, but I manage securities through Blue Line Capital. We do a thematic rotation in securities bucket. And then Blue Creek Capital is what we do the commodity trading advisor through. So we really touch on everything. And you can find us, probably the best way to find us is through bluelinefutures.com.
All right, Bill. Well, I want to thank you for spending your very valuable time with us here at the Traders Summit. And I'll look forward to our next conversation.
Thank you for having me. It was great. I really enjoyed it.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.